Hi guys, we are gonna look at Trident group of hotels, and first my view will be about EMA. So I will launch my EMA indicators of 50, 20 and hundreds. So moving average exponential, two types, and I also like to understand the relative strength index RSI. So since this is my default view, I always like to fix my default views. Email length 200, and I like it to have a bit bold the line. Why? Because it is the strongest line which takes real guts for a stock price to cross this. Similarly, EMA 50 is another uh, good EMA for me. It also tells me the short-term views, the last 2 months, how is it performing, the last 50 candles. And I would like to save this in a template. So save indicator template, EMA RSI view. So next time if I click on templates EMIRS view, and this will be appearing. So one good thing I can see about this stock is currently it is at the EMA 50 is acting as a support, which is a very great thing. So I'm happy with the performance of EMA, this stock which is close to EMA. So let me draw some resistance and support lines. I can see one trend which is clearly coming from here. I guess I'm trying to, okay, as per this chart, if this is the case, it has broken down the support as per this line. Given another chance, since the week has already closed, today being Friday, uh, I might not think this is the case. I think it has actually broken down the support. If this is the case, it will have a downfall of in this zone per se. This could be its zone of first support point. Then you cannot exactly tell where it's having a U-turn, but U-turn is for sure in such kind of things. If fundamentally it's strong, the U-turn is very close by. So if it is taking this as the upper side, actually I'm ignoring a lot of past data, which is not should not be the case. I'm considering that this line has acted as good support in a few cases. So I'm giving that goodwill consideration that it could be. So I'm anyways telling that this is a diluter, even dilute line. It doesn't have much to say, but then yeah, this could be your one line where it can hang over a little longer. So which is in the range of
Well, I don't think we have many support or resistance line trend lines here. So why don't we go for the past data to a
yeah,
long term?
we'll go for a long-term view in this case, but it is still in a buy zone. You can say if you're buying at 56, and if you're okay holding till 50, which is a 6 rupees loss, the upside can be huge, provided the market is again in the good direction. And if you see here, there's one more line. If I draw accurately from point one, okay. So in this case, it has not yet crossed this orange line. I can increase its shade of color, showing that it is still in the within the limits. So if you see here, it is within the limits. So I would like to purchase it if possible by Monday if it is not defaulting on this line. And I am expecting a pattern which will be in between these two lines, and somewhere it will break this line. Or even if it crosses this, it falls back here and consolidate and again have an upward or a downward movement. So my risk is limited to only 6 rupees above the greater support point. So currently there's no risk if you're buying here, and if the market is going this ways, there's no risk at all. It will be like infinite risk reward ratio, a reward risk ratio. But then we have to wait and watch. So you can purchase 50% of your investment here, and rest at 50 if the trend is going to be positive and there is good news in the market. We'll see a little bit longer term. We'll go for a week's view. In the week's view, I think the saturation has come up. It is trying to go, and like if you see, it's going like this, and it has come to a point where it has to consolidate or rethink about its caliber, and it has become a multi-bagger in the recent. If you see, from this high of 20s, it has become 24 in just a period of time, the last 6 7 months or so. It has been doing great. So what happened in the 6 7 months? I think fundamental analysis should be able to explain. So let's move on to the fundamental analysis of Trident. For the stock members. Okay, analysts have suggested to buy the stock. The ticker tape analysts are positive about it. It's a textile company. It has a brand. Okay, it's a brand. Promoter holding has not changed. It's a lower promoter holding, and the mutual funds are holding it. And Motilal Oswal has given a buy signal. And recent event loss of share certificates, not a big deal. They can go for indemnity or something like that. Uh, the momentum continues to drive growth. Okay, Motilal Oswal is positive about it. So let's see our forecast how the things are. Low 5%. So he's even telling that 56 5%, which is in the range of 2 rupees or 54. I think he means to say that current situation, uh, current point is a stop loss point. So there's no much losses to it. So I am also in that view as well. So if you see, the 2 rupees loss is something close to 54. So this could be a strong line of support. But anyways, it's always good to have stop losses, GTTs in place. Okay, next is median 10%, 10% which will come to 56 plus 10%, 5 rupees upside, and then 25 rupees on the higher side. So we can say that this stock has the potential to reach 70 again, and then continue its growth path. Next, coming to its financials. Okay, it has a decent revenue. Seems like little affected with COVID scenario. The profits have still been great. You can say it's okay. Good profits are maintained. Okay, the taxes, I don't see much on interest also. Net income is okay, good. So all in all, they are good. They have increased their payout ratio. Maybe the investors have feared that key. There could be chances of investors quitting. So maybe that was it. This is a very old fundamental which tells about the past of it. So if we get the new report this March, we'll be able to understand what is what. Till then, you can read about the investors presentation where they discussed deeply about the insights, how the company is moving forward, and you can download it from here for the last quarter. Red flags found, stock ASM list. What is ASM list? Additional surveillance measure reports. I think it is a big red flag if it is a company which is known to violate things. But we'll have to understand a lot. Why is it in ASM list? So huge red flag for that. So always make sure that your GTD is in place. Uh, that will save you from falling steeply. Or you can go to their peers who are doing far better. KPR Mill Limited is a good company in terms of their sectoral wise, and also Vardhaman Textiles. They have good PE ratios. So we'll do a video on KPR Mills or Vardhaman Textiles based on the comments. And let's see the forecast. Awesome. Okay. Either ways, KPR and Vardhaman, their peers are performing far better. So Trident has a lot of scope, and currently, if you're investing, make sure that you are ready to take a small loss and exit at the earliest. The red flag is true. Okay, now we'll go for news, if any. Trident is in buy zone from Motilal Oswal. Nifty below YT drags. Trident has a good profit 3 weeks back. Okay, this is a good news. Should be back now. This 3 weeks old. Impact has been already done, so couldn't do much. Events, no events. Dividends, yeah, last dividend is given at 0.36 for a 44 rupee share. Okay, this is okay, good. So all in all, Trident, you have to play it with risk, and with the levels mentioned here, you'll have to go in a cautious manner. As such, the stock is in ASM list, additional surveillance measure. So make sure that you're exiting with the minimal loss possible.